Hi guys, my name is Michael. Welcome back. So the last couple of days has been really interesting. We've seen a lot of ups and down, the volatility, the fear index, moving from greed to fear. So many things have been happening. But right now it feels like, the storm is over in Wall Street because everyone is breathing a sigh of relief, like, whew, thank God, that is over right now. But if you know anything about Wall Street, you understand very clearly like the bodies take a while to float to the surface. So while it feels like everything is fine right now, you never know, something might have happened that will take around 3 to 4 weeks before we understand clearly. But right now, the general sentiment is that everything is behind us. But one thing I like to do on this channel is to get us to go beyond what is happening and to take that extra step to understand what is going on. And sometimes to understand what is going on, you have to follow the trail. You have to pick up the crumbs. You have to pick up the pieces and put it together to form a picture of what is going on. So in this video, I want to share with you a couple of things that I picked, across this last 3 days of volatility in the market. Just some things that some people might not have noticed, but I just want to share them with you here. And the first thing I want to talk about is Japan. Coming into 2024, Japan was a concern for everybody, in terms of the global economy, and it still remains a concern. It just shows us that the situation in the Japanese economy is still a problem. There's still something wrong in the foundation, when it comes to Japan. And so, the Japanese yen has been a headache for everyone, in the last couple of months, and it feels like Japan is still a volatile situation because a lot is going on in Japan. So our eyes need to be on Japan still. So we're still going to keep our focus on Japan even as we move further into the year. The next thing I want to talk about is that, do you notice that every time there's an issue in Wall Street, every time there's a crash or something, the average retail trader gets to learn a new word, and this time the word is called the yen carry trade. So what we found out recently was that a lot of people were borrowing money from Japan to invest in the United States. If you watch my video on Japan, I talked about this. I said Japan had kept interest rate at zero for a long time. So what they were doing, what a lot of traders and investors were doing, where they were going to Japan to borrow money in Japanese yen at 0% interest rate, convert that money to US dollars and invest it in the US economy. And so they were taking the difference in the interest, and they were keeping that. So that is the trade that they were doing. So this is the trade that caused the issue in the stock market the last couple of days. So that is something we learned, and it just shows you how a black swan event can easily happen. There are a lot of things going on behind the scenes that we don't even know about. You as a day-to-day investor, you're not aware of. Like before, the yen carry trade, a lot of investors, average investors, have never heard about this thing before, the yen carry trade. It was the same thing with the subprime mortgage, right? A lot of day-to-day investors, a lot of pension, people who are investing their 401k, or they've never heard about these things before. So it just shows you that this system is filled with black swans, if I can put it that way. Something can come up that you've never heard before, and it can disrupt the whole stock market. So this time, what we've learned is the yen carry trade. That is the one who we need to add to our lingo now. So the next thing I want to talk about is Warren Buffett. It just feels like Warren Buffett is worried about something. Nobody can put their finger on it, but it feels like Warren is seeing something on the horizon, because we learned on Saturday that Warren Buffett, Berkshire Hathaway, they cut their stake in Apple, by 50%, and that is a big deal, and that is why the whole, investment community are talking about it. They are worried about it. For somebody like Warren Buffett to cut his stake by 50%, I mean, this is a seasoned investor, and we all know Warren Buffett, right? He likes to invest in a stock and hold it for life. This guy has held Coca-Cola for the longest. He has held Coca-Cola stock for over 30 or 40 years now. So he doesn't really, he's not a trader, right? He doesn't buy a stock and then sell it tomorrow. So he holds a stock for a long time. So for him to take that move to cut their position in Apple by 50%, and not just Apple as well, they've also been selling their stake. They've been cutting down their stake in Bank of America as well. So it means that he's trying to, de-risk if I can put it that way. And if he's doing that, what it means, what he's telling the community is that he sees something coming. No one knows exactly what it is. Some people are thinking that, oh, it might be the issue with Japan that he saw coming, and that's over now. But we just understand that Warren is worried about something, but no one knows exactly what it is, because what we know now is that Berkshire Hathaway they've sold their investment and they have everything in cash. And every time you see someone making such a move, it means the person is seeing something on the horizon that is making them make that move. So that is the third thing that I picked from this couple of days. The next thing I want to talk about is that what became clear, during these few couple of days, is that Bitcoin is not digital gold. A lot of time people make the case for Bitcoin as digital gold, talking about is rarity and is the fact that Bitcoin has a finite number, 21 million Bitcoins. That's the total amount of Bitcoin that can ever be created. So a lot of people try to make the case for Bitcoin as digital gold. But what we see is that in a time of volatility and uncertainty, Bitcoin does not hold up like gold. When the issue was happening on Monday, Bitcoin was reacting like every other crypto out there, because the way it fell, wasn't, in comparison with gold. I mean, it was just far apart. We saw that gold was holding up, even though a lot of people were selling gold in order to cover their positions and their margin call in the stock market. But gold held its a place as a safe haven. So what this is telling a lot of people who are paying attention is that people who have been looking at Bitcoin as a safe haven, like, oh, I'm going to sell my gold, I'm going to invest in Bitcoin. Bitcoin is a safe haven, is this, is that. These are signs that this is not the case, no matter how much you want it to be the case. And if you take a look at this article from Bloomberg, it said, as equities, which is stocks, right? It said, as stocks sank on Monday and carry trades unraveled, Bitcoin behaved more like stocks than gold, at one point tumbling 17% to below 50,000 before recouping some losses. So what they notice here is that during this crisis, Bitcoin did not react the way gold will react. So what we can take from this is that if it is not gold, then it is not gold. Do you get? If it is not gold, it is not gold. So that is something we need to pay attention to in this time. The last thing I want to talk about is something that I believe that a lot of people are not paying attention to. So at the middle of the volatility on Monday, a lot of users were reporting that they could not log into their trading accounts, into their brokerage accounts. And this is something that we need to understand, that, in times of volatility, right, these trading platforms, these crypto exchanges will place restrictions, to users, when there's volatility in the market. Can you imagine, right, in the middle of the whole panic on Monday, right, a lot of people are seeing the stock market, the prices of stocks and the prices of indexes coming down, but they couldn't log in to the account to sell. And these are controls that these applications have already in place, that in times of volatility, to discourage, people from overselling, right, they will place restrictions on the account. So a lot of people were trying to log into the account to make trades, to sell, to buy. Even if you wanted to take advantage of the opportunity in the stock market, like we talk about, let's say, you're seeing stocks coming down and you want to pounce on that opportunity to buy a stock, right? So a lot of people could not log into their account. And this is something that we need to pay attention to. So if you're someone that is, going the extra mile to understand what is going on, you will know that this is a time to diversify. You cannot have all your investment in one trading account or one crypto exchange, rather, because there will be restrictions. These crypto exchanges, these stock stock platforms or these trading platforms all have controls, and once they hit those benchmarks, they will place restrictions on the account. Some platforms will let you log in but not let you trade. They might not let you trade a certain amount. They might not let you withdraw. There's so many controls that they have in place in those platforms, and you don't see them until the times of volatility. So this should be a test for you, right? We saw what happened on Monday, which, in comparison to things of the past, that is something really small, right? Because the indexes only fell by a couple of percentage. That is not a typical black swan event. So if they could place restrictions on this small situation, can you imagine what they will do in a situation where, you know, there is an actual black swan event? Do you get? You might be weeks before you're able to log into your account again. So we need to pay attention to these things. If you take a look at this article here, it says Charles Schwab said the company was experiencing technical difficulties while its website was temporarily unavailable. So while these technical difficulties are going on, you will not be able to contact support. You will not be able to get any sort of help. So you will have to wait till the storm is over before you can see what is left in your account. I mean, is it not amazing that after the volatility, after the entire issue in stock market had subsided, right? All the trading platforms came back online. These are things that we need to pay attention to. And we're talking about restrictions on the top trading platforms: Charles Schwab, Fidelity, TD Ameritrade. You know, those are like the top trading platforms in the US, right? So these are things that we need to understand, right? That even when you're making gains, right, you will not be able to log in to sell. So imagine if you had a put in the stock market, you had a put, and you know your put was generating money. You will not be able to log in to close your position. So these are things that we need to understand. I mean, it's very unfortunate, but this is how the system works. And if you want to make something out of this system, you need to know how it works, and you need to be able to strategize based on this understanding. So I hope this has been really helpful for you guys. I just thought I'd bring this to your attention. You remember to like and subscribe. Click on the notification bell if you like this video, and I'll see you guys in the next one. Bye for now.